Yeah, welcome to another episode of the Traders Talk. My name is Abe Forest from Lagos, Nigeria, and today we're going to be discussing about the US stock market and the financial market at a whole. Now, looking at what do you call it now, S&P 500, which measures the benchmark of all the top 500 companies in America, including the tech companies. You notice that there has been a rally up to the top. Recovery from the initial issue we had as far as the Strait of Hormuz is concerned, when the Iran war and the US war started. It dropped like 4%, and after that the market was able to recover, and for straight 20 something days now the market has actually recovered and now is moving to the top, ignoring this geopolitical tension. And another thing is we need to talk about is the inflation that is ravaging the continent or the global economy as a whole. Now, looking at what we have here right now, you find out that there is inflation, as the case may be. Last week the CPI index was 0.5%, while the PPI index was also 6%, which is which means that there's inflation. And the Fed, which is the Federal Reserve in the United States of America, are expected to hike the interest rate, as the case may be, in order to curtail the inflation. And we notice that the previous chairman, which is Jeremy Powell, has been relieved of his duty, and now Kevin Walsh is going to take over and is going to be installed, I think, next week. So Kevin Walsh coming in is kind of hawkish, in the sense that they are going to be hiking the interest rate in order to curtail the benchmark of the inflation, as the case may be. When you look at the other central banks all over the world, the European Central Bank, that's the ECB, the Bank of Japan, that's the BOJ, and also the Australian banks, the central banks, there's inflation generally due to the energy shock that we had out from the Strait of Hormuz that has been shut down. There hasn't been supply of oil generally all over the whole world, which has actually risen the energy cost. The per barrel for oil now is trading within the range of should be around $99 per barrel, so which is very much expensive. So that alone is, it has been ranging between this place now. So you notice that it is just around I think it's $100 per barrel as of today. So all these things are supposed to have a direct effect on the stock market, as the case may be. But the stock market is not bowing to all this pressure, the inflationary pressure, the geopolitical tension, and other other stuff that are ravaging the continent, as the case may be. But the question we need to ask ourselves is, why is this happening? Now, you notice that the AI boom is yet to stay. The Nvidia, which is the biggest top company in the whole world, which has a $5 trillion capitalization, which is running the race for AI, and Intel, AMD, and the Micron. These are the semiconductors stocks that are on the forefront of the AI boom. Now, looking at this, and at the same time, the quarterly earnings that came out from all these tech companies, tech giants, are positive, and investors are kind of happy, and that's why I found out that this market is rallying up to the top, ignoring all these geopolitical tensions and the inflationary issues, ravaging the economy all over the whole world. And we should be very, very careful. Now, if you look at the Nasdaq too, Nasdaq has increased. Can you see the value? It has actually increased, has moved up higher. I think more than 20% up higher. S&P 500 is the major benchmark for all the top American companies, which is 500 companies, while the Nasdaq, which is the US Tech 100, that's the first tech 100 companies in America. the Tesla, the Amazon, the what do you call it, Nvidia, the Meta, and the rest. What do you call it? I think I think Amazon. I've mentioned Amazon, Microsoft, Google, and the rest, and Apple. So we have 100 of them, but the major giants are these ones that I just mentioned previously. So when their quarterly earnings came out, it was positive, and investors are happy. But we shouldn't forget that we are still having energy shock as far as the Strait of Hormuz that is being closed up to this present moment. So, but though Donald Trump, which is the president of America, has we are optimistic in the following week that there's going to be a very good stock, such that probably the war is going to come to an end, as the case may be. So, looking at this, we need to, the AI boom, because looking at the AI on its own, it's of different components. You have the AI infrastructure. Majority of all these tech companies in in America, they have these data centers that are building all over the places, such that this AI has come to stay. We have the compute, we have the memory, we have energy, and we also have this networking, we have storage, we have servers, we have industrial equipment, as the case may be. So all these kits that I just mentioned, all these AI components I just mentioned, there are companies under it. Several of companies are under all these things. So there's positivity that the market is going to rally up to the top. That's the reason why we find out that all these stock markets are just moving higher for the past more than a month now. So it's an opportunity for people to invest. Now, we shouldn't underestimate the bonds, because the Americans, is when the war started, before the war, bond market is a market whereby we don't need to ignore, as the case may be. If you look at this 30-year yield, look at this 30-year yield has actually moved up higher. As yield increases, the United States debt is going to increase. Presently, as we speak, the American government is having a kind of $39 trillion debt, as the case may be. Bond is like a form of debt if you look at it very closely. And the major people that are financiers of these US treasuries is Japan, China, and some other countries all over the world. They believe in these US treasuries. That's why they buy this bond, so that it can be a kind of, like, if you look at part of the $39 trillion is what the American debt is right now. Japan has 1 trillion US bonds that they bought out of this 39 trillion. So we have several countries that are bought bonds in America, as the case may be. So for the past, since the year 2000, America has not run a budget surplus. It has always been deficit for the past 20 years, I guess. So that alone is an indication that the bond market shouldn't be ignored, because that means that the tax that have been paid in the United States government is not enough to run the budget of the American government. So they rely majorly on these bonds, and as bond yields increases, the debts of the American government is going to increase. But for every 1% that the bond yield increases, then there's going to be a kind of $590 million increase on the debt of America. So we shouldn't ignore this. Despite all this, the stock market for America is still booming, and that is as a result of the AI infrastructure, because people are investing so much in this AI, as the case may be. Now, looking at this 30-year yield, you notice that it break through this point, as the case may be. Now, if you look at this point, it break through, so there's a breakout. Now the yield has actually gone up higher, as the case may be. So is not good for the American government, because the higher the yield, the higher the national debt for America, as the case may be. Now, in the same vein, you find out that the bond prices is going to be going down, as the case may be, because the bond market is an opposite of the bond prices, is an opposite of the bond yields. Bond yields are going up, the bond prices are going to be going down, because the major bond holders are bailing out. They are, because as the yield is increases, the amount of interest that they are going to be getting is going to be reducing. So that is why they are bailing out. And looking at this, the new Fed chairman that is being introduced, which is Kevin Walsh, is going to raise interest rate. And once he raises interest rate, he's going to use that to curtail the interest, the inflation that is ravaging the American government, and not just American government. Every other country will follow suit, because they look at American government as a mirror of what is happening in the global economy. So as soon as it comes in, it's going to reduce the interest rate. I think the interest rate is it's going to increase it. Sorry. The interest rate is 3.75%. So, and don't forget that the higher the interest rate, the higher the mortgage rate, the higher the credit card, the higher house loans and the rest. You understand, in America. So they need to do this so that to curtail the economy. Maybe probably in the later period they can actually still reduce it. But for now, they don't have to curtail these inflationary measures, from the energy shock to the bond market issues, so that prices of goods and services are going to be going up higher because of inflation. So this interest rate is going to curtail this. That's one of the reasons why it has to be increased, as the case may be. So I think that is what I see about the market. And looking at gold, I think the Dow Jones, which is also the Wall Street company, is also ravaging to the top. Is going up higher. All the stock market is going up higher, and the dollar index, which is the strength of the dollar, is actually increasing after a major consolidation for months now. So it's trying to test this level before it breaks out and start moving up higher, depending on what happens in the economy. Interest rates, with fingers crossed on the interest rate increase, as the case may be, because it's going to help the United States dollar, as the case may be. So I think those are the major things that we need to talk about as far as the global economy is concerned. So I'm going to see you guys in another episode. All right, take care. Bye bye.